What if you knew exactly how much money you have at retirement? Well, you can know that by having a whole life policy that works as a master savings account. That is the greatest explanation of what a whole life policy is. See, with whole life insurance, you're going to pay a set premium that never rises and never gets more expensive. You're going to pay a set amount of dollars into your policy each month. Every time you allocate some dollars to that policy, your death benefit is going to go up. It doesn't stay the same. Okay, so it's going to rise over time. And it's going to be an exponential growth. So for every, let's say $1 that we give the insurance company, that can be, just for the sake of numbers, obviously it's going to vary based on health and different factors, but how insurance works is, whether it's life insurance, car insurance, health insurance, it's always an exponential growth in terms of the benefit that you get. Now, whole life insurance is the only benefit that lets you receive these dollars back to you tax-free, and you can actually use these dollars guaranteed, because you are going to die at some point in time, and this whole life insurance covers you for your whole entire life. You're not guaranteed to get sick and go to the hospital. You're not guaranteed to wreck your vehicle and end up needing to get repairs or have your car insurance kick in. So with that being said, the point being made is you can put your dollars into this policy, whereby every $1 that goes into it, we could be seeing an exponential growth of times 10. So I put in $1, I get $10 inside of a death benefit. All we want to do is turn a little bit of cash into more cash, just like any other thing that we normally try to do, right? What are we trying to do? We're trying to work a little smarter, and hopefully it helps us work a lot less harder, right? So we're going to take our dollars, we're going to put them into our whole life policy. So let's say every $1 that goes in, I have a $10 increase inside of my death benefit, or maybe even a $100 increase inside of my death benefit based on my age and my health, right? With that being said, upon me getting this increase inside of wealth, I'm then going to extract the value from that. So I'm going to take a loan against my death benefit. Now, if I took a loan against the death benefit, where's my deposit? My deposit is still where? Inside of my master savings account. My deposit is still there, and it hasn't been touched. I took a loan against a larger amount of cash. Which one would you rather borrow against? $1 or $100? Me, I'd rather borrow against $100. So I'm going to take a loan. I'm going to go out there. I'm going to pay down some debt. I'm going to make some investments. I might buy a car. I might put it towards a house. I might even give a loan to some friends and family, or, do some private lending as far as real estate. I can do a number of different things, but what was important? It was important that I took the right first step. What was the right first step? To take my small amount of money and turn it into a larger amount of money. And then from there, I make moves using the larger amount of money. I want to take from the larger number, not the smaller number, because if I take from the larger number, I can not only continue to have my dollars stay there, because a loan is not a withdrawal, right? The dollars that we put in was a deposit. We didn't take a withdrawal, so our dollars are still there. We're going to take a loan against the value of our lives. And so I have this question for you now as we go through this. Why are you worth more dead than alive, but you're not using the money while you're alive? Think about it. Life insurance. Why have we been taught, and why do we think about it in terms of death insurance? We think about, when I die, this is when it works. That is death insurance. That's not life insurance. Life insurance is something that I can use right now. It can benefit me right now. I can go send my kids to college. I can pay down on my car, my house. I'm able to use this cash right here, right now, while I am alive. So the idea that I want to plant inside your mind is, what if you had a master savings account where every dollar that you put in was guaranteed to grow, guaranteed to increase? And then you can save those dollars while still being able to spend those dollars. I can't do that with a regular bank account. If I set up a regular bank account at Wells Fargo, Bank of America, or whatever, I'm going to put in, let's say, $100. If I want to buy something and I need to use the $100, I'm going to subtract from what is inside that account. But if I put in dollars into my whole life policy and it buys me a death benefit, and I borrow against that larger number, my dollars that I originally put in are still there. Why? Because I put in $1 and I got $100. So my $1 is still there. I'm essentially borrowing against the new $100, right? So I put in $1, I got $100, and I'm borrowing against that $100 rather than the $1. So I actually have 99 new dollars that I can borrow against and go do whatever it is I want to do. So why do we want to borrow? We want to borrow so that our dollars stay there and we can continue to earn interest on those dollars, right? Because what's happening? Every dollar that we put in there is exponentially growing. So I want to keep my dollars there while being able to borrow against a larger number. And by doing so, when I do that, not only do I have the opportunity to pay myself back and keep all the dollars that I pay back, more importantly, I can spend them at the exact same time. And that's just something I wouldn't have been able to do if I had a regular savings account. I would be taking withdrawals and not a loan. Why is it a loan? It's because I'm alive. I'm not dead. I can't take from a death benefit if I'm not dead. So what happens is they give me the cash value of that death benefit. Here's how much you can have of the future value right now. So I don't want to wait until I die, because I don't know about you, I have never really went to the mall or seen dead people shopping online with their iPhones, right? But what I have saw is individuals that borrow against the value of them being dead and use it right now while they're alive. So coming back to what I asked before, why are you worth more dead than alive, but you're not using the money while you're alive? Think about it.